Actually, for the central bank to arrive at that decision, it's a long process. It's a long analytical process. We look at various things, both globally and domestically, to arrive at that decision. For instance, we look at the global economic growth, so the forecast of global economic growth. And we realized that global economic growth currently is projected to decrease from the previously predicted 3.3% to 2.8%. And for the sub-Saharan Africa, it was supposed to grow by 4%, but those forecasts have been reduced to about 3.8%. So we look at that as global growth. What does it tell about Rwanda? Then we look at the prices, the forecast of prices globally. You saw in the presentation, we anticipated that, for instance, prices of energy will decline. So when we talk of energy prices, we're talking about, we're also talking about things like gas, things like petrol, oil, that kind of things. We look at the global prices of agriculture internationally. Then we look at inflation globally. We look at our economy itself, what the forecast that we are having. And then in the end, we decide probably inflation in the world is going to be at around, in Rwanda, the inflation in Rwanda is going to be about 6.5% next year. And remember, the objective of this monetary policy is to make sure that inflation is stable. So after all that analysis, we conclude that inflation is going to be 6.5%. And because our policy is targeted to look at inflation, then we decide either to increase our central bank rate or reduce it. The other thing that we have looked at, probably we are going to talk about it, is the global kind of politics, the American tariffs and global conflicts and those kind of things. So we also look at them, how they are likely to affect our economy. And then we decided that given all that, it's better currently to maintain the rate as it is as we continue to monitor the development in the world economy. 6.7% is not a good, is probably not a good inflation to have, because normally developed countries target around 2%. But we, as a central bank, we have previously looked at our economic the fundamentals of our economy, and we decided that we are okay if inflation is between 2% and 8%. 2% because we want to target what developed countries do, but also 8% to be realistic with our own economy. As I told you, inflation in sub-Saharan Africa is expected to be about 13% from 18%. So you can see us with 6.5%, we are not worse off as compared to the sub-Saharan Africa countries that we compare ourselves to. So it is in our target range, as we said. Probably you could argue it is going towards the upper band of the range. But we didn't feel like we can really increase the interest rate now, because as I said, there are still some uncertainties in the world economy. And we want really to kind of play the expectation, just the waiting game to see where it goes, rather than rushing into it. And especially that we are in our range. We don't see anything threatening our economy. We thought maintaining stability means keeping the interest rate as it is now. For Rwanda, I would say so far the impact is minimal, and probably that has to do with our exposure to the world economy, because we are not directly targeted by those tariffs. So our exports to America, to the US, are very minimal. And even with those exports, the American tariffs mean that our exports will be facing only 10% duties, which is not very bad. Of course, not good, because at some time it was zero, but yeah, it's really about 0.2% of our exports, so it doesn't really affect us that much. The impact, the indirect impact that I'm talking about could come from our imports, because, for instance, China, which from where we import 37% of our goods and services that we import, is targeted. So, which means if those tariffs have impact on China, goods from China could be expensive for us, which could be, of course, detrimental, because that will mean we will import that inflation from China. But even with that, we have not yet started seeing it. So we are still waiting. But as I said, the impact is supposed to be minimal and indirect. So far, I would say the main threat will come from China, because, as I said, we import 37%. China supplies 37% of our inputs. From Europe, we do get some imports from there, but we don't expect that to be a big issue. And then most of our trade is also done with the region, about 12% done with the region. So unless themselves import that inflation, which then we will import ourselves, but otherwise there is no big threat. That's why you have seen our projection of inflation is supposed to still be around 6.5%. So it's not really a major issue so far. In the face of this disruption, of course, investors have become cautious, understandably so. But the message we are sending to the world and to the Rwandans with this monetary policy decision is that the fundamentals of our economy are strong. Our financial sector is stable. So people should not be worried about investing in Rwanda. We have measures and we have ambitious plans to grow this economy, so that we are projecting a 7.1% growth. That, of course, will be supported by investment, be supported by new ideas. So for Rwanda, and as you said, our financial sector has liquidity, and private credit, the private sector is increasing. So really, we are saying to people, to investors, and to Rwandans, the fundamentals of our economy are still strong. Really, they should continue to invest, and that's the only way that we will be able to withstand any threat that can come out of these political and geopolitical uncertainties. We need to diversify our reserves, like we currently do. We have reserves that we invest in different areas. So we invest in US Treasury bills. So we want just to diversify. our own reserves. And the research has shown that gold is one of the safest type of reserve. First of all, for the last 20 years, gold has shown a positive trend in terms of value, increase in its value. So, and it is a safe one because it is not vulnerable to these kind of political tensions or others because it's real value. So we want to diversify, we want to be independent in terms of, we can also keep it here or keep it in a safe country, but as a country, we decided, let's go this way. Yeah, there are standards in terms of the kind of gold that you can have. So they have to be certified. There is a level of purity that gold has to have. I think it's about 99.9%. So yes, for instance, we have production, we have a plant here that refines gold. We can buy from them, but we can also buy from international markets because there are standards that we have to abide. Our board has already taken the decision to do it. So we are exploring it as management of the bank. We also need to build capacity in terms of managing it because this will be the first time that we do it. So we are also contacting the countries and central banks that have been managing gold as one of their reserves. So it's soon, but just to say our board has taken the decision to do that and we are going to do it. We currently hold different types of reserves. We invest in treasury bills, American treasury bills. We also invest in central bank bonds. Some are short term, others are long term. And they're currently really earning very well. But as I said, it's a good idea to diversify because as you saw, the political, the geopolitics and the international politics has become somehow unpredictable. So as a sovereign country, we need to react to that kind of development to ensure that our financial sovereignty is safeguarded in any condition. Our economy is strong. The fundamentals of our economy are strong. We are growing higher than the average of the world and higher than the average of Africa and the sub-Saharan Africa. Our financial sector is well capitalized and liquidity is available. Really, we need now to work together to make sure that we put all these efforts together to grow this economy for the welfare of every Rwandan.